students, my name is Gaurav Bansal and we are going to start with a series of question practice where we are going to do practice of previous year question and through which we develop the skills to answer future questions. So these are thematic and today we are going to cover money and banking as the topic. So we have picked a few questions from the topic and those we are going to analyze. The purpose is not just to solve those MCQs but also to understand why a particular question has been asked, if it is linked to some current affairs, how to approach a question, and if same topic is there, then what similar question can be asked or what alternative question can be asked in future. So money and banking. If we look at that theme, then it is one of the important themes in UPSC history. And if you look at the past 20 years question, 25 years question, almost every year, multiple questions from this topic have been there. In last few years, in mains, this topic has not been asked as such in last 5 to 6 years. But before that, even in mains, this used to be a very important and big topic. Now it is being asked only in PT. However, this can very well change. Nobody would ever be able to know when UPSC will start asking it again in the mains. Now, in PT, if you look at the topic, then almost 2 to 3 questions from this topic, money, banking, financial markets, financial terminology, which have been in news, these are asked. So, let us look at the questions. One thing with these questions is that it is very difficult to get these wrong. So, if you work hard enough on these questions, these are almost a sure shot correct questions that you can get. So this area is almost guaranteed for no surprises. Hardly ever there is an absolutely random topic that is asked. Otherwise, usually you can answer these questions because these are based on some predictable behavior and so first of all, we are looking at a question on money multiplier. So on money supply, there are multiple types of questions that have been asked and can be asked again. Okay, two questions we have picked up in this particular slide also. Now they can ask you about the measures of money supply. Okay, M1, M2, M3, M4. They can also ask you about the types of money. So types of money is also a very interesting topic. So in which you study fiat currency, okay, and you study the fiduciary currency or fiduciary money, etc. Similarly, apart from money types, they can also ask you about the role of money, the characteristics of money. That is another topic. And similarly, if you move ahead, then from the same topic, they can, from the topic of money, I mean, they can ask you about money multiplier as the question is there. And they can even ask you about many more questions related to money, for example, cryptocurrency in today's context. Or another area which is relevant for coming year is the digital rupee, e-rupee. So likewise, now let us look at this money multiplier question. So money multiplier is a concept that if government introduce 100 rupee into the market or RBI introduce 100 rupee into the market through banking network, the overall money supply increases by much more than 100. Overall money supply has a bigger impact, and this is something that we need to understand here. Money multiplier improves if the cash habits are less. People, if they keep more of their money in the banks, if they keep very less of cash with themselves, then money multiplier is expected to be high. The reason is all of us make payments to each other with money. And those people, if they deposit the money back into the bank, it will come back into the money supply as credit. You deposit money into bank, the bank lends it out to other people. Okay. So if more and more people keep their money into bank, then banks will have more money to lend out. So deposits, if people maintain more of these, then money multiplier is also high, always high. So that is one of the reasons why money multiplier can be high. Banking habits of people are higher, or they keep more deposits into the bank. Now, the deposit that we keep into the bank entirely, it cannot be converted into credit. There is some amount which is kept as CRR, which never become money supply again, as it is kept with RBI, and then SLR, which also moves out of circulation to the government. So SLR CRR, they reduces the multiplier. If SLR CRR is high, they reduce multiplier. So that is the concept in this question. Now look at the options. Increase in CRR. If a CRR increase, banks can convert less of deposits into credit, and hence multiplier will be. So this is incorrect. This will decrease the multiplier. B, increase in banking habit of population. This is exactly what I was talking about. Okay. So for example, instead of this, in examination, they can also ask you introduction of UPI. What UPI has done? UPI has reduced our habit to keep cash, because anywhere we can pay through QR. So since people do not keep much of cash, banking habit increases. We keep money in bank. So B is directly related to UPI. So in future they can ask you relatively more complex question, although underlying logic will be same as we have discussed. So B is the answer, but still let us look at the other options. Always look at other options, because you never know. An answer may be seemingly correct, but there may be another option which is almost universal true, which is better than that statement. C, increase in the statutory liquidity ratio. No, this will be having the same impact as E. So this also is incorrect. This will decrease multiplier. D, increase in the population. This is not a related parameter. We do not know what will happen. Maybe these are unrelated. There is hardly any correlation between the two. So again, D is also not a valid answer. D is the answer. Now let's look at the next question. Question number 2. Which of the following statement correctly describe the meaning of the legal tender money? So another question on money supply where they have asked you about the types of money. Legal tender money, which is also known as the fiat currency. Fiat currency is basically legal tender. And how do we define legal tender? Very clearly, it is always defined as a mode of payment which people cannot refuse. A mode of payment in which people have to necessarily accept the payment. So, in this case, B will be the answer. The money which a creditor is under compulsion to accept in settlement of his claims. Look at the other options also. The money which is tendered in the court of law. No, just because there is legal in the statement, you do not have to make guess. Okay, lot of students who do not know the term, do not understand the logic or the underlying concept, they will go for these kind of options where they will link legal with something related to law. So A is not correct. It is not about court of law or something. The bank money is the form of check, drafts, bills of exchange, etc. Are you under foundation to accept these? No. Nobody can force you to accept check, draft, bill of exchange. Okay. But currency you have to accept. You cannot say no. Okay. So C is also not correct. D, the metallic money in circulation in a country. Metallic money is part of the fiat currency, definitely. Okay, but B is better answer because it's just a very small amount. The paper money is also the legal tender. So B can lead to misleading statement. That's why B will be the answer. There is nothing wrong as such with D, but it is incomplete. B is better, much better. And by the way, as we are discussing the questions, you might have noticed that we are also discussing what alternatives are there. In the first question, we have discussed a lot of alternatives to that question. That if I have to set up a similar question, or what other question I can set up on the same topic, that also I am discussing. Question number three, what is the purpose of setting up small finance banks in India? So, small finance banks are differentiated banks which are set up on the basis of Nachiket More Committee's recommendation. So, there has been a Nachiket More Committee which recommended for financial inclusion, and few of its suggestions were about some niche banks which later on were defined as differentiated banks by RBI. So on those basis, payment bank, small finance bank, all of these were created. So what is the principle of small finance bank? What are the conditions on them? They have to put 75% of their loans in priority sector lending. That means 75% of their credit will go to priority sector. Secondly, 90% of their credit will not exceed a certain amount. Okay, these amounts are updated from time to time. So for example, let us say if this amount is 5 crore, that means no loan will be more than 5 crore. Okay, beyond 10%. So if bank is giving a total of 5,000 crore rupees as a loan, 4,500 crore rupees worth of loan should not have any loan above 5 crore. That is what it means. So now let us look at the options. There are more conditions, but not really required for this particular question. So I'm not going into more details. To supply credit into small business units. So small business units are part of MSME, and MSME come into priority sector lending. And these banks have a mandate to give more money to priority sector banks. And similarly, they are likely to create smaller loans for more units. So that will also benefit small. So first is correct. Supply credit to small and marginal farmers. Small and marginal farmer come in priority sector lending. Again, since they have to give priority sector lending more than a commercial bank, they are also going to benefit more. Third, to encourage young entrepreneurs to set up business, particularly in rural areas. This will also come into the category of priority sector lending, rural development, rural investment. So this will also be encouraged. So all three are correct in this case, 1, 2, and 3. All of these get benefit from small finance. Okay. Similarly, payment banks were also created. What was the purpose of payment bank? To create digital banks, so non-physical banks, or create branches with very limited expenditure, very limited budget, more efficient banking. These were the objectives of payment banks. The term base erosion and profit shifting is sometimes seen in the news in the context of. So those who are aware of the topic, they know this is about black money circulation, base erosion, profit shifting, when firms take advantage of international tax havens. They set up firms in those countries. Sometimes it may not necessarily be a tax haven, but there might be a loophole in the system. For example, Singapore. Singapore is not a tax haven. Singapore is known to be a highly disciplined country with very less corruption. But with Singapore, the difference was that we had a very liberal DTAA, double tax avoidance treaty. And in that, there were some loopholes which Indian businessmen benefited from. And that is why they would set up their companies' offices, or they would set up alternate companies, sister concerns in Singapore. And through that, they would save tax significantly. So, due to loopholes, also sometimes there can be such type of profit shifting. And of course, due to the presence of tax havens like Panama, Bahamas, etc., it happens. So I hope we are clear. So Base erosion, profit shifting, when firms open international operations and then they engage into transactions so that in India they have less and less profit, and in those foreign firms they have more profits. So, for example, they sell their products to those companies at loss, and what own their exports they do from that territory rather than India. Let me give you an example here. Let us say I manufacture, let us say I have this stylus in my hand. So let us say I manufacture this stylus, which we use on tablets or digital screens. And I'm a well established exporter of stylus, and I make a profit of 500 crore rupees by exporting these stylus. Let us say each of these stylus costs me around $20 and I sell them for $50. On each stylus, I make a profit of about $30, gross profits of about $30. Now, what I can do in India, let us say tax are high. I can set up another unit in Singapore indirectly in another name. I export my stylus to that Singapore company at $22. And from that Singapore company, I will actually export them to my original clients at $50. So from India, I was exporting it at 50 earlier, but now in order to do BEPS, what I have done, I have set up another unit in Singapore, and now I'm exporting through Singapore, not directly from India. And all the profits are going to Singapore, where perhaps the income tax is less or corporation tax is less. So I will save the taxes. So likewise, BEPS creates problem for India, because in India we will have less tax collection. Government tax will be lost in India. So, base erosion, profit shifting, mining operations by multinational companies in resource rich and backward areas. Not very relevant. Of course, multinational corporations do this base erosion, profit shifting, but mining operation, no special linkage. Maybe some people will link it to base erosion. Okay, in geographical sense, but that is not the meaning. B. Curbing of the tax evasion by multinational companies. So yes, we always read about base erosion, profit shifting in context of prevention of tax evasion. What companies do with BEPS, base erosion, they do the tax evasion. For saving the tax, they do base erosion, profit shifting. If we want to discourage BEPS, we need to prevent such type of tax evasion. And it is the correct answer. B is the answer. It is in this context we always study it about. C. Exploitation of genetic resources of a country. No, it's not that physical resource erosion. Okay? Lack of consideration of environmental cost. So none of these. If you do not know the meaning and you go for literal translation of base erosion, you may confuse with the other options. Otherwise, this is well known. Fifth, the interest rate is decreased in an economy, it will. This is an easy question actually. No knowledge is required. You can answer easily with logic. If interest rate is decreased, what will happen? If interest rates are low, it is easy for us to take loan. And what do we do when we take loan? We buy something, for example, house, car. So sale of housing, sale of car, or sale of other consumption products will increase. So consumption increases when interest rate is less. Secondly, investment. I want to invest, I want to open a factory. If interest rate is less, it is a good time for me to open a factory. So investment also increases. So it boosts consumption and investment. On the other hand, if I'm saving my money, I deposit my money in bank, fixed deposits. And if interest rate decreases, then I'm discouraged from saving, because keeping in bank also is not giving me much at that time. So that is also an impact. It discourages the saving. Now let us look at the options. Decrease the consumption expenditure. This is wrong. Okay. We have discussed interest rate decrease will encourage it. Increase in the tax collection of the government. This is not directly related to this. This may or may not happen. There is no direct relationship. There is not a very strong correlation. Still, it can be an answer. It can be an answer if all the other options are wrong, then there is some possibility of B. Let us say interest rate is decreased, people consume more, and let us say our tax is consumption based. Our entire tax is consumption based. There is no income tax or etc. There is largely GST in the country. So GST collection will increase because people are consuming more. So that is one possibility, but for that we have to assume a lot, and it will not always happen. That's why. So B may or may not be correct. Not a very strong relationship, and that C, increase in the investment expenditure in the economy. This is much stronger and direct relationship. So C will be the answer. Although if you can't find any other suitable answer, B also could have been the answer. It is not absolutely wrong either. D, increase in savings. This is wrong because savings will decrease. So B is can be correct in some conditions. C is correct in most conditions. So C should be the answer. This is very simple logic based answer. Okay. Next question. Sixth, if RBI decides to adopt an expansionist monetary policy, which of the following would it not be? What is expansionary monetary policy? Expansionary monetary policy is the one which increases the money supply, which expands the money supply. Expansionary policy which expands the money supply. Contractionary policy which reduces the money supply. So if RBI has to increase the money supply, which is not a correct option? Cut and optimize SLR. If SLR is reduced, more money is available for banks to lend out to private sector, and hence this will increase the money supply. This will increase the availability of credit. So A will increase. Okay. A will increase money supply. We want which will not increase money supply. Okay. So one is incorrect option for us because it increase the money supply. To increase the MSF rate. MSF rate is one of the policy rates, interest rate. And if interest rate increases, money supply reduces. So 2 is one of the correct option. Third, cut the bank rate and repo rate. If bank rate, repo rate are cut, then that also increases money supply because interest rate is less. People will take more loans. 3 is also incorrect. Answer should be 2 only. B is the answer for this one. So before attempting such questions, you have to simplify the statement. If you simplify it, it is very easy to answer. For example, how did we simplify? That expansionary monetary policy means increasing money supply. So we have to check the option which decreases the money supply. Such options are needed to be picked. Next, Indian government bond yields are influenced by which of the following? So, bond yields, what people get by purchasing bonds, that is bond yield. Bond yield is from the perspective of buyer of bond. I have purchased a bond, how much return I am getting on my investment, on my money. That is bond yield. Now, actions of the United States Federal Reserve. If America changes the bond rate, Indian government is also forced to change the bond rates in India. If USA increases bond rates a lot, then nobody in international market will buy Indian bonds. Indian government also will have to increase its bond rates. So USA has a very strong impact on all other countries. So our bond yields are affected by actions of Federal Reserve. One is correct answer. Two, I mean, we have to see how many statements are correct. So this is correct. Two, action of the RBI. Of course, RBI action can always change the yield. For example, 2 years ago, RBI experimented with something which became a very famous topic for students. Which became a very famous topic for students. Okay. What was that? Try to read about Project Twist. Okay. So there was something called Project Twist, which was in news 2 to 3 years later, in which what exactly RBI was doing? It was changing the bond yield of short-term and long-term liability of government. So short-term bonds, their yields were decreased, and long-term bond yields were increased by RBI. So RBI can always adjust the bond yield. So since that was a very specific topic in news, you should have been able to link it with that one. Third, inflation and short-term interest rate. Yes, bond yields are affected by inflation and alternative interest rate. If banks are offering very high deposit rate, then government is also forced to give higher interest on its bonds. Otherwise, there is no incentive for outside buyers to purchase the government bonds. So if inflation is very high, then also government has to increase the bond yield. So these have a